Good morning, Trade Pros. Sound check to everybody. Good morning, YouTube. Welcome. Let's get started with today's morning market update. We got a lot of stuff to cover. It's going to be kind of a busy one. Let me turn around and turn the camera on so I could see you. You could see me. By the way, this week is a very important week. First and foremost, I'll tell you why. Because I think it's the weekend where I realize, or the week that I realize it's time to get a haircut. I can't continue doing this like this. Right? It's just too much. It's too much, I tell you. It's haircut time. And that right there is breaking news. I hope you had a great weekend for yourself, your family, doing things you love with loved ones, and you've been recharged and ready to go because I think we're going to have a pretty tumultuous week. And it's going to be full of opportunity, but I think it's going to need mental capital to get through this week and strong mental capital, focus, and discipline. And if you recharge the batteries over the weekend for 5 days of that, great job. That's a good start. The big story, obviously, that's developing is the Supreme Court killing the IEEPA emergency tariffs, ruling them that they are not or that Donald Trump didn't have that within the emergency powers to enact that for the usage of tariffs. All right, Trump goes to 15% from 10% in return. Supreme Court ruled that it's unlawful on Friday. That caught us off guard in the trading room. There's been many hearings from the Supreme Court where when they read out the agenda items, it wasn't on it yesterday or Friday, rather. We expected the exact same thing to happen. And it was a shock when they said they will be ruling on it. And it was even a shock when it happened. Now, looking at the charts, we felt like there would be more volatility, more movement. But in hindsight, it made a lot of sense that there wasn't. I'll tell you why in a second. All right. Um, so Donald Trump raised the rates from 10 to 15% over the weekend using Section 122, but that's capped at 150 days. So Congress now has to act to extend beyond that 150-day period. So the clock is kind of ticking on that 150 days. So really the impact of tariffs is there were impacts. There's more questions right now than we have answers. Like if it was unconstitutional or not unconstitutional, but if it wasn't within his power to enact the emergency to collect 130 plus billion in tariffs, will countries start to sue for refunds? And we're already seeing that taking place. It's become kind of a mess. All right. Um, and that's really kind of the picture that we're at the moment. There isn't really clarity as to the level that traders and investors and portfolio managers and institutions are looking for. So all they could really do is hedge. Now hold on to that because that's an important piece of this whole puzzle. All right, equity futures down across the board on the stock market. They sold off hard on the Asian Open on the 50% tariff headline. Donald Trump raising it. All right, Europe tech is leading the losses. Um, and that's where we're at. A little bit of rebound here heading into the morning. We're going to talk more about it. Trump on Truth Social said that obviously criticized the Supreme Court decision. He says recent ruling gave him more power and strength than he prior had to the tariff ruling. Okay, can use licenses to do terrible things to other countries, but he cannot charge them a license fee. And he goes on and on. I'll let you read it. And look, I've always been a big believer that we have to strip politics and political viewpoints out of discussion as traders, and that's great in two ways. Number one, it allows us to connect to humans we normally wouldn't based on opinions, and to love each other, to support each other, to stand united on the fact that we do a job together that very few people succeed at. The last thing you want to do is alienate each other over political viewpoints. I think it's the most ridiculous thing. But the second thing it helps us do is stay objective. Thank goodness this isn't a political show, right? Because it helps us stay objective on the task at hand and to look at politics through the lens of how does it impact markets. So when you hear me talk politics, this is the only interest I have in talking about it. All right, it's how will the markets be impacted? How does that solidify or harden their edge or loosen it in certain days? And I'll talk to you about Friday in a moment as well. The other big news this morning was Fed's Governor Waller. Um, this was kind of the big, most recent, fresh piece of news because we've known about the tariffs from Friday. All right, you've probably read hundreds of reports already or heard it in the news, heard it in the car. You can't escape it. I don't want to cover it too much more than that. All right, but he said that he would support a 25 basis point reduction in March if January labor strength is revised away or evaporates, but maybe appropriate to hold it if downside labor market risks have diminished. So he is basically saying if the labor market continues to strengthen, it may not make sense to cut rates. It might just make sense to hold for the March meeting. But if the labor market does poorly, then the rate cut becomes a stronger need for the Fed. This is a very important thing because he's just tied a ship to the labor market for the Federal Reserve. And obviously, he realizes what he's doing, but now the labor data becomes that much more important. And the labor market data becomes important because good news is bad news for the market. Bad news in the labor market is good news because it supports a rate cut, lower rates, stimulates lending, stimulates really the glue of the economy, which is leverage lending. Um, and that's an important piece. He said a few other things that were kind of interesting. All right, he also said that he was the dissenter in January and favored another cut. So this is he identified himself when we had that meeting and they decided to hold rates and there was a dissenter. He was one of them, Fed's Waller. All right, he said it might be appropriate to hold policy rate at current levels if downside labor rates diminish. We said that. He says Waller would support a 25 basis point reduction in March if January labor strength is revised away. So now we're looking for the January non-farm payrolls report. That's key. And he says that the rates of the two possible outcomes at this point is as close to as a coin flip. That's a bit of a bomb here because I think we were expecting rate cuts coming up. The expectations were primed in that we're increasing for rate cut, and Waller just says it's a coin flip. A coin flip means you're confused, right? Like, why do people go to a coin flip? Let's settle this coin flip, right? Because there's a dispute that got to the point where nobody's gonna win, and you're kind of confused. You don't know what the outcome is. You need a random probability to push things along. That right there is a I think went a little bit unnoticed by the market, but it has put some of the downside that correlated to what Waller's saying. He goes on to say a lot of things about tariffs as well. Um, Looking at tariff effects on inflation. He said tariff increases have not affected long-term inflation and will temporarily boost inflation, but it's a temporary measure. Um, she says the administration plans to impose tariffs other ways using other laws. We already know Trump's clarified that on Truth Social, and he just goes on to talk about a whole lot of stuff. All right, I'll include the full notes for you guys inside our Circle community for the members of part of the community, so you can have a read through it just so you understand. That's just a little bit of a summary. All right, for the Circle community, I posted a really fascinating article as well, by the way, for members in our room, in our community where it talks about hedging, institutional hedging, gamma, and some really fascinating stuff on the inner workings of the industry and why we're in such a tight range in consolidation at the moment. Just a note for them to take a read of that. All right, on the commodities front, gold's up 0.8%. Silver's strong as well. Oil is down 0.6%. Copper's flat, and Goldman Sachs raises the forecast by $6 a barrel for oil. All right, on the geopolitics front, Iran is front and center with along with tariffs. All right, Trump said he considered a targeted strike on Iran, potentially followed by a larger attack. Obviously, didn't happen. Iran says any U.S. strike is an act of aggression. Very odd timing for this, but then also very appropriate timing considering they're heading into talks this Thursday in Geneva. All right, so via mediators, not directly. So there's going to be some more updates there as the week progresses through. All right, key speakers today. Waller's already done. ECB's Lagarde, Bank of England's Taylor speaking. It's none that's really U.S. impactful, but monetary policy is a global thing. It's a global tool these days. You should kind of know what's happening across the pond. Not going to impact S&P as much though. All right, let's turn around and do some chart work. And I got to tell you this. Today could be a day where you make a plan. The plan is fantastic. The level holds. The trade qualifies. Textbook, top-notch quality. Everything looks amazing, exciting. You're high-fiving all the traders in your circle of how great of an entry you finally made in the market. You're like, this is my best trade entry. Yeah, and boom, tape bomb. The thing just explodes and wipes your stop and laughs at you. Be very careful. Today is the day of tape bomb risk. Tape bomb risk means at any given moment, you're susceptible to have a breaking report out of nowhere, unscheduled, unplanned, just out of nowhere. And where it might come from, take a guess where it might come from. It might come from Donald Trump via Truth Social. If you don't have Truth Social streaming, in your computer screen, in your news portal, you're missing a lot of the breaking news. I have a news aggregation service and I have Truth Social up there on the left. Um, it's got its own tab because it's become the mouthpiece for Donald Trump, right? And his policy changes, agenda, and a lot of his preemptive discussion before action gets taken place. So you listen to it there. Also, if you have a news service, listen to it there. They'll cover it as well. But careful, there's a tape bomb risk today, this week, the whole week. You're, it's okay. It's all right to take risk in being in a trade, knowing that because you can't control that. But the way to adjust is, all right, is to use a stop, always protective stop, to use smaller size maybe as the week gets started. This entire week, if you're positioned a little bit smaller than typical, it's not only okay, it's pretty smart. Let's get on the chart. Let's have some fun. It's pretty smart. Let's get on the chart and fill up the content of our heart. I don't know what the heck I'm talking about anymore. I just try to do a little Dr. Seussian rhyme. Where's my people in the chat on YouTube? I don't see you guys saying anything. That's kind of concerning. Or maybe I'm just not seeing it. Ah, there it is. Prochet, good morning. Oh, huge win to USA in hockey. Congratulations to the United States men's Olympic roster. That was a that was a great game. That's the best hockey game I've watched in forever. It's so fast. It was so skilled. Both teams had pressure, insane goaltending on the US side. It was a fantastic game. And believe it or not, a lot of my friends were like, "Oh, well, you must be so upset." Because I moved from Canada and we know Canada's like a religion, hockey there. I said, you know what? I kind of wanted the USA to win. Like, why, man? You're from Canada. You should support Canada. And I'm like, listen, Austin Matthews looked really happy winning that gold medal. He might just bring that back to the Leafs. That's my take on it. You know, once you're a winner, you have that winner mentality. You bring it with you everywhere you go. You'll never not be an Olympic gold medal winner. Anywho, I digress a little bit. Steve, good morning, brother. The news service I use is called News Squawk. It is a professional grade news feed that is fed into a lot of prop firms around the world and institutional desks. It is a little bit on the pricier side. We have a discounted relationship with them. Can't say the price, can't say anything, but it is open to active members, and we're revisiting that partnership where I could make it even stronger for the team. But it's called News Squawk. All right, let's get into it. Morning market update and the trading plan. It's time to get through it. Um, Let me see my notes. Here are my notes. Here is the morning market update one. You could see all the notes that I use for this, by the way. It's not a mystery. I read some of the notes. I prep. You know, people are surprised to find out I prep more time in the morning than I trade sometimes. I'll prep for like an hour and a half, 2 hours. I'll trade for 45 minutes some days. And it's not a surprise. Preparation. All right, winning is where preparation meets opportunity. I don't know. All right, stop this more. Okay, let's let's get into the story for the U.S. The story for the U.S. session is, of course, the story of Friday. All right, and I'll tell it to you. The market opened at 68.55. Down here, we marked the open. We sold off a few points, very small amount of points, 3 to 4 points, because 47 quarter was the prior day low. All right, and then a strong rally into the 69.25 level. All right, the 69.20 level was our flip zone, and I got to tell you, looking at it in the morning as this thing took off to the upside, I couldn't help but feel how wrong I was for setting a flip zone above and only being able to short all the way below 69.25. But a few things kept us away. We had manufacturing PMI at 945. All right, so 940, the trade shapes up. Wait, you got a big news event. Wait, I can't do the trade. Then you go to 955, the trade looks great. And then, oh, you have the SCOTUS ruling that's coming out, and they will rule on Trump. All right, great. And then they rule on Trump. And then the news is shocking, all right, catches everyone off guard. And then you're kind of thinking, what should I do? I expect this crazy volatility. We don't get it. We don't get the crazy volatility. So by the time the SCOTUS ruling came out and I got back to my mindset of mental terms of, okay, we're doing this again. Let's set up the next trade. It was over. I lost mental capacity. I lost focus. I lost the care and the will to trade that day, and I called it. So I had nothing on Friday, and I was so happy I did it. Okay, because looking back at a day where you decided not to trade, You could always, in the land of opportunity, tell yourself that you would have got a winning trade, but you always ignore the fact that, hey, you know what? By not trading, I may have avoided and missed a lot of pain and losses, blown out accounts, tilt, FOMO, and emotional roller coaster that I just didn't go on. But you'll never know what happened. So just remember, I made the decision to not trade it because I thought it presented more risk than opportunity. Simple as that. You don't have to defend it to anyone, including yourself. It's a decision based on data, based on context. All right. So, anywho, we got a strong rally. We got the ruling. I decided not to trade for the day. Talked about all that. And then I realized over the weekend, this is a good moment to talk about this. S&P has barely moved year to date. All right. And then I read some articles. It's in the tightest 2 month range in history at 3.7% versus 20-year median of 8.6%. That's not just the tightest range, that's less than half of the tightest range. All right. Yet the VIX, the volatility gauge, the market is moving higher, essentially putting pricing in fear. There's more elevated fear in the market. Slowly, the AI story is unraveling. Everyone's kind of slightly more worried than they were before, but the market is stuck in this consolidation, multi-month consolidation it can't break out of. That could be a problem. It could also be an opportunity. It could also mean that if we do get some upside and start going to new all-time highs, there's a lot of traders and institutions that are over-hedged that need to buy back their hedge, and they're underrepresented on the long side in terms of weight in their portfolio, so they can start chasing it. Yes, that's one variant. The other variant is the risk is going to catch up to the market. The fear is going to catch up to the market. Fear is a 3 times stronger emotion than greed. And if it catches up downside, we see Goldman Sachs trading desk is already planning for a little bit of an extended sell-off. And they've been sending those notes to their institutional clients. I've read them through the weekend. So this elevated VIX and this sideways market, all it told me, and I put the pieces together over the weekend, then I see an article this morning that confirms it. I posted it in our circle community. It's a must read. It said everyone is hedged. That's the problem. Everyone is hedged. That is the problem. That's why we're in such a tight range. There was so much unknown going into the start of this year. And then with tariffs as well, yes, we got the ruling on Friday, but it wasn't the risk only on Friday. It's been a risk every SCOTUS meeting since the beginning of the year. We've had a few. So everyone is already hedged. Everyone's fears are already protected, right? And the market is grinding sideways. Not only are their fears protected, the market is trading at the level where they protected their fears. And so, what is there to be afraid of, bro? I'm hedged. Like, bring it on. SCOTUS, MOTUS, POTUS, bring it. Bring it all. I'm ready. I'm prepared. This was part of my prudent portfolio management process. I put together the hedges I need to. So, yes, fear is rising. People are paying more money according to the VIX to get downside protection. The put skew is way higher right now than the call skew. All right. Nobody's practically buying calls or taking flyers. I'm talking about the institutional side. Retail, I don't really read into. I don't really care what retail thinks, to be perfectly honest with you, because they have a $5,000 account at I don't know, what was that, at Robinhood. Great. You got an institution with $1 billion portfolio they're managing. Their opinion to me is a little bit more market moving information. So institutions are hedged. They're not afraid at the moment, but they are paying money for the hedge. The VIX fear is climbing, all right, on the back of the put skews and people paying more money for downside protection. And you got a really interesting paradigm here in this market where we're at 2 month range, historic contraction for this time period. All right, fear increasing, but market pretty much at full hedge levels, which when you're at full hedge levels suppresses trend moves. When it starts to go up, it suppresses the upside. When it starts to go down, it suppresses the downside. And the more hedges you have, the more stick these levels have. And the market has stuck like a fly on a fly trap. It's stuck in this area. So I had to give you that context. It wasn't planned. There was no notes. Just went off the top and I riffed, but I had to do a brain dump off of my brain onto yours, just so you understand what is going on here. And behind the surface, I think a lot of institutions, CTAs, and professional traders are actually preparing for the next 300 points being down, just based on the fact that fear is elevating and the market is hedged, that tension has to resolve. Those hedges either have to end up being worth it, or those people are going to be screaming as we start to go up and we hit new all-time highs and everyone's scrambling to buy it, and you're going to have a runaway crazy bull trade. Either way, I'm not putting probabilities to either outcome, but the move is coming. This is going to resolve. It has to. Just note, fears rising and institutions are hedging on mass proportions. All right, back to the USD. Price got volatile, but range bound. So, in retrospect, the shock to the Trump announcement not being as volatile, I expected much more movement. We didn't get it. It makes sense. Everyone's hedged. All right. We're pinned between 69.80 and 69.25 the whole day. Ended up being a good trading range, but I disqualified myself. And the last thing that I'll ever do is when I say I'm not trading today, start trading. Because then now you really drop the ball on yourself. You're dropping the trust and confidence in yourself as well. All right, so we rally up to set the prior day high, 31.5 into the closing bell. Then we come off a touch into the PDCC prior day cash close of 69.25. Range was 84 and a quarter points. Volume was 1.826 million. Not that much elevated considering the tape on the news that we got from SCOTUS. The overnight story is simple. Price is sold off from the Globex Open. Overnight high was at 69.23, pretty much where it opened. All right, immediate downside pressure on the sell. Overnight low formed at 68.67 half. All right, then rallied in kind of into the middle of the range where we're sitting at the moment. We're settling into the middle of the range. That's where you would expect markets to settle. There's big longs below, big shorts. Big longs above, big shorts below. The midpoint is usually the settle point. That's where you expect it to kind of sit, chill, and consolidate. The extremes are on the edge. They're tradable around the 68.80 and 69.25. I'll show you that in the trading plan in a moment. All right. Volume right now is 207,000. It's picking up. It's still not massive, but it's not bad for a Sunday uh, reopen on Globex that's flowing into a Monday open on the US. All right, here's a trading plan. Flip zone is 69.25, short below those levels. 6,900 is the first one. We've kind of already got it. We're rotating around it. 69.08 to 10, some value area, high structure there. And then 69, 20, and 25 is the top end of the flip zone. Above the 25, we're probably going to start pushing north. We get another failed rally there. It's not a good sign for the rest of the week. All right. The big expectation is that we have one long on the plan today. Despite the fact we're below the flip zone, we're expected to short. We have one long that's part of the plan, even though we're below the flip zone. This doesn't happen often in these kind of market conditions. It happens more often in the summer when we're range bound. But we're range bound here in February. So we gotta adjust. All right, we can try along near 68.80. And in fact, I will if it qualifies. I'm gonna look on NQ to ES relative strength for that, for the qualifying and order flow to really, really qualify and make sure that it filters a trade to the highest opportunity. All right, that's it. So we're looking to sell rallies below the 25, above 25, we flip long to the downside. We have a long opportunity range bottom at 68.80. All right, gamma report is flip zone is 6,900. And this Z has some kind of special character. So maybe it's a gamma flip zone A. I don't know. 6,900 is the level. And you could also see 6,900 as the midpoint of the range. All right. That's where gamma is neutral. I mean, that's not a surprise. Okay. One day max is 69.91. This is imputed values off options. One day min is 68.54. Net gamma is minus 4 million. Very small. Dealers seem to be hedged appropriately. We've already talked about this. Because there's been a lot of call and or put option activity, they have hedged out their gamma and their delta exposure via gamma. And we're kind of neutral, 6,900, and it's going to be a pin level. It's going to be a sticking level. Gamma level is the downside. 68.55 is massive. 6,800 is even bigger, but it's down there, 100 points away. Doesn't mean we can't hit it. It's a really big one. And then 66.95, we probably won't get that one today. That's your morning market update. You guys have a great trading day. I hope the extra context was helpful for you. Quickly, I'm going to just review stuff on YouTube, and then we're going to get into the room. I'll give you the MBO report. There's some really big action setting up on MBO, and then we're going to just get rolling with the day. Are you using Mac? What trading platform tool do you use for Mac? Yes, John, I'm using Mac. I'm using Sierra Charts via a software called Crossover. It runs a virtual machine in the cloud, and it runs bulletproof, solid, fantastic. Nothing but good reviews about it. Very reliable. Someone's buying lots of options for gold to reach 15K, 12,000 contracts sold. That's a big bet. That is a big bet. But it could be a hedge as well, right? Like sometimes these options positions are read into as a directional move, but you never know. This could be a hedge bet as well. But it's a massive one. That's a big, big ticket. 15,000, 12,000 contracts. That's insane. Thank you for the putting that on the radar. I'll take a look. YouTube, I love you. Consider joining our trading room. We do this every single day. We do live analysis and setups once we end YouTube, and it's it it's a blast. We've seen a lot of success with our members very early on from relaunching this community since my break and my full-time comeback. I love you all. Have a great day. All right, take care of yourselves. I'm gonna see you tomorrow for another morning market update. See you inside our community. It's probably the best value proposition you'll ever get in this industry. I don't know. I don't have data to back that up, but I'd say it's true. Love you.